eventually an ARA health association plan put together. This is individually still underwritten from a insurance standpoint, and the idea is to collect information so then eventually we can have a true health association plan that is available to everybody throughout the country. So what we'll do is today the idea is to go through the ARA Health Service team, introduce you to them. We'll go through the affinity program, what it means to be part of this program, the level funded products, how that works, what the quoting process looks like, and then Adam will walk through a sample quote. Throughout any of this time, you can feel free to ask questions. You can throw it in the chat room or whatever it is. We want this to be as informal as possible to try and just make sure that we're getting everything answered. And if you have something that's not addressed throughout the process, you can actually shoot us an email, shoot Jeff an email, and we'll get back to you as quickly as possible. So the team that we have Adam and myself and Melissa. So Adam and I work for Hub International. Again, we are the intermediary and work with Melissa and her team at Allstate. We do have a website set up so you can go and view some of the information there. And then we do have an email address. This is where all email go to get quotes. It's the ARA Health. It's set up directly for you. It goes to a team that just deals with the ARA Health program, gets quotes, and then responds back to you with any type of information that they might need, get you the quotes, the initial quotes to walk over. And then also at the end, we'll get you the underwriting information for the health apps. So Melissa, do you want to run through this?
Yep, absolutely. My name is Melissa Cook. Like Aaron said, I'm located in Milwaukee, Wisconsin, and I am the rep here at Allstate that will be working with ARA and Hub to provide you some health care. A little bit about us. So Allstate benefits, everybody's seen them. Mr. Mayhem, you're in good hands. You must have heard of Allstate in the past. So obviously founded in 1931, and then take us all the way fast forward to 2021, and they acquired National General Benefit Solutions. National General Benefit Solutions is where I originated from. Before that, we were Time Insurance, Fortis. We have been doing insurance for 100 plus years and have been acquired in 2021 by Allstate Benefits. What that means is not only do we work for a huge organization that's nationwide, but we also have an A+ rating on AM Best. For those of you who don't know, AM Best is what insurance companies are rated on to pay for claims, and then they're scored. So A+, so we're paying our claims. We're one of the leading providers for supplemental coverage, and through this, we are offering you health insurance through Allstate Benefits. We have set up what we call an affinity program for ARA. So everything has been customized through Hub and ARA to find you a health solution. And what an affinity program is it is a way that your association, ARA, is able to offer you health insurance benefits. We take on the administrative responsibilities, and we help give you the tools that you need to get your health insurance for your small group plans through Hub. And so that is just a little bit about what we do, what an affinity program is. You might hear that. And part of the affinity program allows you to get extra perks like telemedicine through MeMD, as well as Vitality. So these are things that are added to your health plans. Typically, each product is about $5 per employee per month. So you are getting both. So $10 per employee per month is what you would be saving. And what it is MeMD is a telemedicine service that offers urgent care for minor illness, as well as talk therapy sessions, 5 per month with a licensed therapist. With COVID, people have been focusing and shifting their focus towards mental health. I think more than ever, COVID's kind of made everybody a little crazy, being stuck at home. The world is constantly changing. And so we have switched our telemedicine provider to MeMD to offer those talk therapy sessions to you. And then Vitality is our wellness. And so that is a program that is able to be personalized for the employees by the employer to offer a variety of different options. So like we talked about, some of the affinity ads are going to be the Vitality Rewards Mall, which you're able to go online based on your activity and some challenges that you can enter. You can buy specific things on the mall. The employer is also able to offer Vitality, where you got a biometric screening, followed by a $25 gift card to Amazon. And then there's also an activity tracker that we can connect with your group specifically. If your employees take part in this and enroll, you can save up to 5% on your group's total premium. And then, like we talked about, the NEMD. So it's a cost savings benefit. You know, instead of taking yourself to urgent care or seeing your provider for when you're sick, you're able to just make a quick call and either do a virtual doctor's appointment, or like we said, a virtual talk therapy session as well.
Webinar. It's about like,
so as we're talking about healthcare, something that you might hear a lot of is level funded. And not to get too into the weeds, because we all know insurance isn't the most fun thing to talk about. We're going to be looking at your groups from a level funded perspective. And what that means is, based on your group, we are going to assess that risk and then price appropriately. So to think of it, you want to think the size of a cake equals the number of lives on the policy, or the number of employees that you have. And then the amount of icing is the amount of medical risk for the group. So you go to the store, you buy a box of cakes, you buy a can of icing, and that's going to be your end result. You don't ever want to have more icing than wedding cake. I mean, some people may want a little bit more icing than they do cake, but for the most part, there's going to always be more cake than there is icing. So what that means for you is, depending upon the amount of medical risk, AKA the icing that you have for your cake or for your group size, is going to determine your price. So the healthier you are, the less money you're going to be spending on health insurance. So some of our sweet spots and what makes Allstate special is we have groups all over the country, in all the states except for Hawaii. I truly think that's because they don't want us taking trips to Hawaii to do employer meetings and employee meetings, because we just turn it into a vacation. But we are able to be accessed throughout the country. We have flexible participation requirements. If you have a 1099s that you have working for you, or part-time employees, you can determine your hours of eligibility, and you're able to carve out specific designated classes to offer your group. We also have flexible submissions. We have a fast timeline. We send everything out via DocuSign. From you start to finish, it would take about a week once we get the preliminary quote all the way to getting final numbers and then the sale, in a perfect world, if you were to go back to back to back with the process. So it's a very, very quick implementation. And then you're also able to get a refund of claims reserves that you have. Whatever's in that surplus, your group is eligible to get a refund. So not only you're going to be saving money on the front end in premium, but also the cherry on top is going to be that potential refund at the end of the year. And then lastly, what makes us special is us. Adam and Aaron, they're completely available to help and walk you through plan designs, talk options. I am as well, whether you need me to be a part of your employee meeting to explain this concept or explain your plan to employees, or you have any questions. I'm always available, working from home, AKA change of the radiator. And then we have a wonderful support staff as well that's there to kind of help you navigate this process of insurance from start to finish. So with that, that's just a little bit about Allstate. And so I will kick it back off to Adam or Aaron to kind of take you through Hub and what they have to offer.
Cool. Thank you. So how to get a quote. So you can email any of us, the three of us is fine, or the way that we've been preferable is to go through the ARA Health email address that was provided earlier, and you will get a copy of that. You'll send us in. So what it looks like is you'll inquire about receiving a quote. you'll be directed out to the Hub Service Center. Then the Hub Service Center will provide information needed, which will be a census that we request. You'll provide the service center with that census. We'll send it over to Allstate. It takes usually 24 to 48 hours to get that initial quote back from Allstate. And then we'll get that back to you. Then we go through the process of talking with you about the plans that you would like to look at. If you choose to go down the application route, we'll get through the application so we can get you informed as to what the rates will be, because everybody will need to fill out applications in order to go through the underwriting. And it is everybody that is going to enroll, and even those that are not going to enroll, they just don't have to fill out the health information. And then we track that process for you. After you're done completing it, Allstate reviews it, underwrites it. Then they will send us back the underwritten rates, and then either Adam or myself will reach out to you individually and then walk you through the program and what the rates ended up being, and then what it looks like from a underwriting standpoint and from a participation and enrollment side. So here's what it looks like from a census. This is the information that we send out from ARA or for ARA, and then this information we'll need to fill in. We get this back, and this is what generates all the information going forward. So Adam will walk through just what it looks like from a quote standpoint. So then that way you kind of know what it looks like, what to expect when you receive it back from the ARA program in Allstate.
Thanks, Aaron. So like Aaron said, the first step is, reaching out to our team and filling out that census, which will generate what's called, which is the initial quote. Okay, so that initial quote is what is up here. This is the cover page. So Aaron, if you want to go to the next page, what'll happen is it'll generate 6 different plans. So what we did is we got with Allstate Benefits as well as the ARA team and said, hey, what is the plans that we feel are most common? And like Melissa said earlier, every one of these plans are customizable. Okay, so if you have a health plan right now, and one of these 6 plans that we're going to go over does not match close to what you have, we can adjust them. Okay, but we wanted to make sure that we selected 6 of the most comprehensive as well as competitive plans that are offered. Okay, so when going through, this is what the initial quote would look like. And again, if the numbers look good, the next steps are filling out those health applications to get final rates. Okay, so I'm going to go through just briefly what these plans look like. Pretty typical health insurance. Some of the bigger questions that we've had is it says self-funded. What does that mean? And a lot of people have concerns that when they hear self-funding, all of a sudden they're going to be on the hook for millions of dollars in claims, and we don't have that type of resource. We're a smaller company. How can we afford to pay those types of claims? And like Melissa had alluded to earlier, truly interverse that with level funding. Okay, so you can see at the bottom for plan 1, the total cost is $4,892 and change. This is what you would pay every single month as long as your employee demographics don't change. For example, you hired someone, you fired someone. This is what you would pay every single month, no matter if you had $2 in claims or if you had $200,000 in claims. Okay, and we'll get to that in a second. But I wanted to just to point that out. Don't be alarmed when you see this self-funded up there. The other thing is the first 3 plans are your traditional health plans. They have a deductible, co-insurance with not a pocket maximum, and then we have co-pays built in there. Okay. One of the things that is really nice for Allstate Benefits is based on your guys' geographical area, we get to pick which network is going to work best for your area. So for example, this one, as you can see highlighted, is the Aetna network. Okay, so I want to make sure everyone's aware Allstate Benefits is going to administer everything. Okay, they're going to administer all your claims, your customer service, they're going to have ID cards, but the network is going to be Aetna. Okay, so if you were to all of a sudden reach out to one of your providers and say, hey, are you in the Allstate network? They're going to look at you cross-eyed and be like, I've never heard of Allstate's network. So it's good. It's important to make sure that you note, and we'll cover this in detail when we meet individually to review quotes of what your network is. Okay. Aetna and Cigna are their major networks. But again, if Aetna doesn't work, and this is what was quoted, we can look at other networks, including even local regional networks that would fit your guys' area. Okay. So this is just, again, a little bit more details. And then the next slide is plans 4 through 6. And these are more your traditional HSA high deductible health plans, okay? Where you're going to purchase a high deductible health plan and you can partner that with the health savings account, okay? We won't go into a lot of details today on what that means for the health savings account, what that is for high deductible health plan, but understand that we will walk you through in detail. And even if you wanted us to conduct employee meetings and you've never had a health savings account before, I'm happy to jump on a virtual meeting with your employees to walk them through what does that mean, how does it work, and how can that benefit your employees and their dependents.
All right, well, Adam, before we go on to the next slide, I think we're going to do a quick poll question just to get a feel for how people are doing. This question is launched now. If you could just take a couple seconds to answer that one. Would you like the opportunity to receive money back if claims are not, or if claims are low? This one should not surprise anybody. Maybe one person. All right, so overwhelming yes, with one individual with no.
I want to know who that one individual is that doesn't want their money back. If that's the case, we can definitely set it up to where Aaron and I keep that money, and we'll give some to Jeff and Melissa too. So, well, thanks for the poll there, Jeff. And like Jeff alluded to, the great thing about this program, the way we've set it up, is the employer has the ability to get money back if their employees do not utilize their entire claims fund. Okay. So for ease of conversation, I'm just going to focus on plan 1. Okay. Since each different plan has different deductibles, different out-of-pocket maximums, the claims fund is going to be different for every single plan. Okay. So for plan 1, how they Allstate Benefits has structured this is you have your specific attachment point at $30,000. What that means is every single individual that's enrolled in your health plan, they're going to be capped at $30,000 for a maximum. So for example, if someone has a $100,000 claim, that $30,000, if you have funds available, and I'll explain that in a second, that's where that individual will be capped at for those individual claims. Okay, anything above that, Allstate Benefits and their reinsurance is going to pay for that. The annual aggregate attachment point, this is the easiest way to think about this is Allstate, based off all their information they gathered from your employees, this is what they expect your claims to be. Okay. And again, it's a moving target. We just never know. Is someone going to get sick? Is someone going to, maybe get cured from cancer? It's hard to say, but as we know, health insurance is a moving target on what to expect for claims. So this is what, based off of their underwriting and actuarial, the number they came up with.
There we go.
And if you see the claims account at the very bottom that's highlighted, if you were to take that number times 12, that's going to equal your annual aggregate attachment point. So the nice thing is with the program, like I said, if you don't utilize all that $30,000, $635 in the year, you're going to receive 50% of that back. Okay. The way the program is structured, Allstate will retain 50%. The employer is going to receive the other 50% of that back. Okay. So if you had $15,000 in claims after the policy period ended, and there is also a time called run out. As you guys are aware, if you receive healthcare, you go in today, you don't get your healthcare bill tomorrow. Okay. It takes time to process those. So there is a 6-month time period where Allstate will continue to evaluate those claims throughout those past year to see where all the monies land for that policy period. So again, if you guys utilized $15,000 in claims, roughly Allstate Benefits is going to retain that $7,500, and you as the employer are going to have $7,500 to utilize for future benefit costs. Okay. Now on the reverse side, let's say that all of a sudden we had something severe happen and we had $100,000 in claims. Allstate Benefits is not going to come back after you for that $70,000. It will continue to pay just as normal. You're not going to be canceled, but you will pay that total monthly amount for plan one is $4,892. Okay. So the great thing is the way they structured it, they have built the insurance in. So once you reach the annual attachment point, you as the employer don't have any more claims coming out of your fund. That's where the reinsurance will, or the insurance company, easiest way to describe it, will start paying for those claims. Okay. And one thing also to note that we've had questions on is what happens if we reach that $30,000 in the first month? The way they've structured it is every month you'll continue to pay that $4,892, and they'll recoup that claims account amount each month, and basically you'll see that deduction off there. So you're not going to pay any more than that $48.92 every month as long as your guys' demographics don't change. Again, example being we hired a new employee, we terminated someone. Next slide. And then also in the quote, it'll break out how the plan is rated, okay? The thing to note is a lot of smaller groups, they are probably structured, if you have health insurance right now, where this is your age, this is your rate. So no matter if you're a 25-year-old marathon runner or unfortunately maybe a 25-year-old that has cancer, typically your rates are going to be the same. And then if you're 60, the rate's going to be completely different than that 25-year-old. The way we've structured this plan is no matter if you're 25, 35, or 60, your rate is going to remain the same as long as you're only an employee, employee spouse, employee child, and family. Okay. So going back more to what we call the traditional health insurance model for pricing. Okay. You have a 4-tiered rate. No matter your age, your rates are going to stay the same. And then you can see down below, if you want to, if the employees, and we removed all the names so that way everyone is kept confidential, because this is an actual quote from a group. You would actually see the employee's name and what their cost would be based on the plans. Okay. Next slide. One thing we also have done, and this is again through Allstate, it will be 2 separate bills compared to the medical and the dental and vision, is we've partnered with them to offer dental and vision through a company called Beam. The reason why we partnered with Beam is a couple of reasons. Number one, they were the most competitive that offered dental. And then secondly, their unique model that they are offering this benefit through. So I'll start with the unique model because I think it's one of the more enjoyable conversations with this. Typically, if you guys have seen lately with like personal insurance, hey, you can plug in this device into your car and it'll monitor your driving. The safer you drive, the better discounts you get. Well, Beam has done the same for their dental offering. Well, they will issue you and every individual that signs up for the dental and a smart electric toothbrush. You would partner that with any device where you can upload the results, but it will track how often you brush, how you brush. And the great thing is depending on how those outcomes turn out for your whole entire employee base, they may issue reduced rates for the following year. Okay. So they're going to give you a free electric toothbrush, and you have the ability to earn points through their portal to replace any of the heads if you need them for the future. So that's one of the nice things with this. Also, one thing that's unique about this is it's an open network. You can go wherever you would like. They are going to reimburse dentists up to the 90th percentile. Easiest way to explain that is if you were to poll 100 dentists, as long as you're not going to the top 10 percentile of charging dentists, you are not going to have any issues. Aaron, if you go to the next slide, it'll actually break out, as you can see, how the plans are covered is in-network is 100%, out-of-network is 100%. So you can see the plans match up no matter if you go in and out of network. So they're going to reimburse up to the 90th percentile. And if you do end up going to one of those top 10 charging dentists, you could get what's called balance billed. It's going to be a minimal amount. Typically, you'll see that for preventative. So for example, if you go to the dentist and they reimbursed $100, but your cleaning was $102, you could get a bill for $2 at home. A lot of times what we encourage folks to do is just have a conversation with your dentist. They know they're probably one of the top charging dentists out there. And so we just ask that, hey, would you eat this $2 bill instead of billing me and mailing out invoices and wasting a bunch of time there? It'd probably be a win-win for everyone. We have lots and lots of groups on a plan similar to this. Really don't have many issues with the balance billing. Again, as long as you're going to those 90th percentile, you're going to be fine. So the easiest way is you got a 1 out of 10 chance of having that happen. And if it is, it's going to be very minimal. Next slide. And then lastly here, we offer the vision plan. It's through Beam, but the network is VSP. VSP has the largest network available for vision providers. And we chose them, number one, because of the network, and then number two, because of the rates. As you can see, vision is relatively inexpensive. For an employee, it's $7.50 a month for that offering. And the nice thing is for both of these, the employer does not have to contribute towards that. They certainly can, but it's not a requirement. So if you want to say, hey, we're going to just offer this, but the employees pay 100% of the cost, you certainly can do that. For the vision, it is a 24-month rate guarantee. So these rates are locked in for 2 years. For the vision, we really don't see a whole lot of rate changes year after year, just slightly if there are any increases. And how the vision works is you get your exams once a year, you can get lenses once a year, and frames every other year. The one thing to know is with the lenses, the contacts, you either get a choice. You can get your contacts the 1 year, or your glasses lenses, not both in the same year. Okay, and that's just a little bit overview of the vision. Next slide breaks it out a little bit more. The biggest thing that you need to know on the vision is it's really important to make sure you go to one of those in-network providers. As you can see, for example, if you were to go to your in-network provider and you want to get your new frames, you get up to $150. And then after that, they'll give you 20% discounts. If you go to an out-of-network, you're only getting 70. So your benefits are really cut almost over half if you go out-of-network. So complete opposite conversation compared to dental and vision, but it's good to know that moving forward, if you were to sign up for the vision, to always try to reach an in-network provider. And then the biggest thing here that we want to make sure you guys are all aware of, we're here to help you. No matter if you have questions, concerns, don't hesitate to reach out. We want to make sure that your needs are getting met. If for some reason, for example, you really want to partner with us and say, hey, I didn't see that you have a short-term disability offering through ARA. We can still offer that here through Hub, and we want to make sure that you don't have to go to 6 other people to get your needs met there. And then also, one thing is once you do get that initial quote and you would like to schedule a meeting, there will be a link within that email that you get back from our Hub team that will give you direct access to our calendars to be able to schedule meetings in 15-minute increments to address anything that you guys have. We have lots and lots of people reaching out with questions, and we're more than happy to help through the process when we go through it.
Cool. Thank you all. So one thing that I just want to make sure we reiterate too is all the plans that are shown here, the dental, the vision, the health insurance, they are all can be tailored to your specific needs or your desires or what you want to offer. So don't feel like anything that you receive is just going to be automatically what you have to take. It is actually going to be able to be tailored to your program completely. So then that way we can make sure we're not giving you less benefits than what you're already offering your employees.
Hey, Aaron, can we go back? Could you put up the contact slide? I think it was one of the first ones, just so everybody has that information again.
Yeah.
And why Aaron is doing that, a lot of the questions that we get is, hey, how competitive is this? And we want everyone to know this is not going to work for every single company out there. Just like any other health insurance or dental or vision, some of it's going to be a really good fit for some, and some of them it may not be. But we will tell you I think we've run about 10 different groups. And again, this just started a couple months ago. So still getting our, up and running and getting a lot of traction. The first 10 groups, 9 of them that went through the application process, they came back really competitive. Uniquely, the first one that we ever signed up, it was about a 33% saving off of what they currently were spending. And we've had about 180 groups that reached out to us. So we're getting a lot of feedback, which is great. Some of them are just, hey, we want to know more about this, just like this, but not really interested in getting quotes. So I want to make you aware that if it does work, it could be a really, really good solution for you.
I had one question that came in on text chat was, will this be recorded? Yes. And after the call, we'll put together the deck, the recording, and any additional information and get it out to everybody who registered for the call.
Any questions that we can address?
Hi, Steve Capone from Massachusetts. Can you hear me?
Yep.
Hi, do you do coverage in Massachusetts?
We do have the ability to write out in Massachusetts, yes.
Okay, the savings is significant, which you illustrated already. I'd like to send the census over and see what you can do.
Perfect. We'll get that over to you.
Ashley had a question that I got also. It says, if an employer offers this plan to employees, can an employee still opt to go through Marketplace and receive a tax credit?
No, that if there is a qualified health plan being offered by the employer, then it stops them from being able to go through the Marketplace to get their program.
Another question was, is there a fee to get a quote through this program? There are no fees to go ahead and get a quote. So for example, if you want us to run your census and it was not competitive, there's no charge for that. Of course, there's fees built into the premiums if you move forward, just like any other health insurance program, that their commissions are built into that program.
Another question, what was the AM rating, A+ or B+?
It was an A+.
Yep.
And then there is, what percentage of the workforce is required to enroll?
Melissa, do you have that information? How you guys calculate it all?
Yeah, so we need 50% of eligible to enroll or 75% with valid waivers. So valid waivers would be included in that participation. Valid waiver is anything that is not cost do not want. So it could be Medicare, individual, spouse's employer, parents coverage, whatever that is. There is also a buy down option where 25% of eligible or 50% with valid waivers for a slight cost. But we typically don't run into participation options with just the normal 50 or 75.
We don't have 50 or 75 people. We don't have 50% do healthcare.
The other cool thing that you can do through this program too is 1099 employees can be included as well.
Looks like we have another question that came out with the Advantage plan. It states that there are no out-of-network benefits. Where can we go to verify the network providers?
You want me to take this one, Aaron?
Yeah, go for it.
So we will give everyone a link to, and we can include that in this presentation when we send over to you, Jeff, on how to look up providers for the Cigna and Aetna network. But the biggest thing is before you sign up, we want to make sure it's going to work for your employees. And I also want to make a note for
But you're
out of network benefits.
Hated.
The biggest thing that why there is no out of network benefits, a couple reasons. Number one, we wanted to make sure it remained cost effective. And so if we add that in there, there is a little bit of additional cost, as well as out of network kind of gives a false narrative for your employees. And I'll run through a claim scenario that could occur. So since it's out of network, there is no contract between the insurance company and that hospital. So if the employee were to go have a surgery at the hospital that's out of network and the bill's $100,000, how the out of network works is the insurance company, no matter if it's Allstate or any other insurance company out there, they're going to reimburse what they feel is a reasonable amount. Okay. So that reasonable amount might be $60,000. Well, your employees may see, oh, well, I have a $10,000 maximum for out of network, so that's all I'm going to have to pay. Well, that maximum, only thing that's being applied to is that $60,000 that was paid by the insurance company. The hospital's then going to say, hey, we haven't seen that $40,000 for the surgery that we performed. What they're going to end up doing is they're going to balance bill your employee for that $40,000. So their idea of, hey, the only thing I have for expenses are for expenses is $10,000. They're going to get an additional bill for $40,000. Unfortunately, we've seen it happen quite a bit in our office. So the best way to avoid that is to really offer the no out of network benefits, because the last thing we want your guys' employees to have is a surprise on the backside and they're going to get billed, additional $40,000.
The one that we always like to liken it to everybody too is when you have a choice of care, then it is going to be an in-network benefit. That's when the network applies. But if you don't have a choice of care, if you go to the ER or something like that, ERs are always going to be considered in network. Doesn't matter where you're at. So like my son, he broke his shoulder this last year skiing. We went to the ER. They said you have to have surgery right away. We didn't have a choice of care, so that was covered as an in-network benefit, no matter what our network was. One of my clients, she fell and broke her ankle while she was on vacation. The hospital said, she went to the ER and said, you broke your leg. You need to have surgery, but you don't have to have it today. So then that was a choice at that time. And then then she has to make sure she stays in network. So that's the biggest difference. If you're ever on vacation and you have to go to the doctor ER, you're not just going to go to any doctor. You're going to go to an ER. You're not just going to go and say, hey, I don't feel good. Find a primary care physician. You're going to go to the ER or the urgent care. It's always going to be in network then.
So we had a clarifying question. It was, did she say 50% or 75% required to enroll, or were we looking at people? And it's 50% of eligible or 75% of employees with valid waivers for that one, to clarify the earlier question.
Melissa?
And just to add to that, each employer, you are able to pick your hours of eligibility anywhere between 20 to 40 hours. So if you say that your employees are eligible to receive coverage with 20 hours, they would be considered quote unquote full-time. So you're able to kind of offer to either employees that don't meet that normal 40-hour work week or average hours, but then just know that they would be then part of that percentage of eligible employees.
So then can you clarify that 50% and 75%?
Yep. So if you had 20% eligible, or you had 20 hours of eligibility, every employee that worked 20 hours on average every week, they would be considered eligible, and we'd need a total of 50% of those to enroll, or 75 with valid waivers. But we give you the flexibility to choose your hours to make employees eligible.
So a valid waiver would be if they have coverage elsewhere, if they're young and under age 26 and they're on their employee or they're on their parents' plan, then that would be considered a valid waiver. Or if they're on their spouse's plan, that's considered a valid waiver as well. So it's those that don't have any coverage anywhere else that would be counting towards that non-valid waiver where you need the percentages.
We did have a question if we were coverage for both employees and family.
You are only required to offer coverage for your employee only from a participation of their premium. So you are required by rules that you pay 50% of the individual only premium on the lowest cost plan. Everything else is up to the discretion of the employer, whether they would like to pay more for the employee, spouse, employee, child, family coverage, or if they want to have a buy-up plan or whatever. But you are only required to pay 50% of the individual on the lowest cost plan.
Yes, hi, I have a question. So you're going to generate 6 plans. How many plans can we offer our employees of those 6 plans? Can we just offer one, or is there a possibility to offer more than one?
Melissa, do you
You
want
can
to take
offer,
that?
yep, you can offer more than one plan. It depends on how many employees that you have. So if we have 3 employees enrolling, you could offer up to 2 plans. With 16, from then 4 to 16, it's 3 plans, and then 4 plans can be offered with 25 or more employees. That being said, there is a little bit of a cost associated with those plans by offering 2, and we kind of have to work on those plan designs to make sure that they're pretty similar in benefits. A lot of times what we see is other carriers or even employers that are used to offering multiple plans, we're able to give them a better plan for a lower cost. And so a lot of times they just avoid that a little bit of increase and they just offer one plan. But we can definitely offer more than one. It just depends on how many. And then we also need 2 members to enroll in the richest benefit plan. So typically that means most expensive, as well as the richer benefits for that medical offering.
Okay, and then are all the groups on the same plan year, or can we remain on the plan year that we currently have, or how does the plan year work?
You would be able to either choose plan year or calendar year.
Okay.
So if you have a plan year currently, you could, stay with that, or if you want your deductible to reset at the end of the year, you can choose that as well. We do offer deductible credit for groups coming from a current group plan that are going to be on a calendar year deductible. So that's the only way that you'd be able to use that deductible credit is if you have a current group plan with a calendar year deductible.
Okay. And if we do request a quote, is there a possibility that we can get rejected, or because this is a group type of plan, you don't typically reject organizations? How does that work?
We don't, for a preliminary quote, we won't ever turn anyone away. The rates that we show are going to be assuming that everybody is healthy. But then, like Aaron and Adam discussed, we need applications. So let's say, you come back, we get the underwriting. There is not one condition that we turn away. Every condition that we have is dependent or has a dollar amount associated with it. So kind of like the cake and the frosting analogy, we want to make sure that there is more members than there is risk. If there's more risk than there are members, at that point, Adam and Aaron would just have advised to pivot to another carrier because our price point would just not be there. But we're never going to necessarily, quote unquote, decline a group. We could have a group of 2 with a pregnancy. Obviously, we know that's a higher dollar claim. And in that instance, the group wouldn't be a good fit for us. But if we have a 5 or 10, 15 life group or employee group that has that pregnancy, we can then spread out that frosting a little bit thinner to make it worthwhile for your group, if that makes sense.
Okay, so the group is considered our organization. We don't get thrown into this big pot of groups.
Correct.
Okay. All right, thank you.
Looks like we had a couple more that came in through the chat. The one is we have 2 companies, same owner with the ARA. Would we need to do separate policies or could we do them under one?
So you can do either or. If you have the same ownership structure, but 2 separate companies, we can combine them in one. But if you would prefer to keep them separate, we can do so as well.
Offer any kind of materials to provide our employees. We currently don't offer health coverage, so we would need to take kind of a poll internally before we even decide to do a quote with you guys, you know, to see what the interest is and
Yeah, we could supply some information to just basic information on health insurance and what it looks and feels like, and then go from there as to what it would require for them to do and all that stuff.
yeah, because I mean, some people already have coverage elsewhere, or some of them are really young and they just don't even know what they're looking at yet. So I just wondered if like on the website, you had that type of information available, or would I have to send an email to make a request?
No, it would be best if you sent the email to the group, because we don't have that published on that website.
Okay.
We do have just some general information at that arahealth.org website, where it kind of goes through just some of the kind of high level overview for you. And then there's also the link in that as far as to email them directly or use that phone number that we've got on the screen.
Okay, thank you.
All right, did we have any other questions?
I think, Jeff, there's one, and I'm going to defer to Melissa on this one. And if you know off the top of your head, is bariatric surgery covered on the policies?
No, it is not.
All right, well, I did put my information in the chat as well. You have Aaron's, Adams, and Melissa's. The general number, if you guys have any additional questions, don't hesitate to reach out. You can call member services. We can connect you with somebody with the health resources, or just call them directly or fill out the form. We should be in good shape with that. So I appreciate everybody taking the time. I know everybody's a busy season right now, but thank you for taking the time to join us today, and look forward to next month's Lunch and Learn.
Awesome. Thank you all.
Have a great day.
Thanks, everyone.
Thank you.